Good morning. We will pay attention to the effect of VAT when assets are purchased. Bought equipment for R3,420 on credit from Els Wholesalers. So the total amount that you owe Els Wholesalers because you bought on credit is R3,420. So you will have to credit the creditors' control with the full 3,420. Included in this 3420 is VAT that you can claim back from SARS. So when assets are purchased or goods are purchased, you can claim the VAT on that purchases back from SARS. So we have to calculate and see what is the amount for VAT that we can claim back and what is the amount that is the equipment amount. So I will work out the total purchase price is 114%. That is equal to 3,420. Then the cost of equipment, excluding the VAT, will be 100 divided by 114, and that will give me 3,000. So I will debit my equipment account with 3,000 Rand. Then the VAT input is 14 of that 114%, so that will give me 420 Rand. This 420 can be claimed back from SARS, so it is an asset to the business and we will debit that input. The creditors control account is 114% account because it includes the cost of the asset and the VAT. The VAT input is a 14% account. Then all your assets, liabilities, income and expenses can always only be 100% account. Because we claim the VAT back on assets that we purchase or on expenses paid, it cannot form part of the asset or the expense in your ledger or in the financial statements. The only accounts that can ever be 114% account is your bank, creditors control and debtors control. Because in the bank you will record the amount that you pay for the asset plus the VAT, or the amount that you receive for sales plus the VAT. In the creditors, we owe them the money for the equipment plus the VAT. That's why it's 114% account. In debtors, when we sell goods, they owe us the sales price plus the VAT. That's why it is 114% account. So it's very important to realize that bank account, debtors control account, and the creditors control account is your 114% accounts. All the other accounts will be 100% excluding the VAT. If we look at what we studied today, we see that when assets are purchased, that can be claimed back from SARS, so it does not form part of the asset that we purchased, but we owe the total amount to the creditor. So although we can claim back the VAT, we still owe it to the creditor. The total cost plus VAT that is owed is the total amount, although the equipment will only be showed at the cost price.